The Nasdaq market is currently closed, meaning we are looking at the price action from the last trading session. The closing price for BioKey International Inc., under the ticker BKYI, on Friday, November 7th, 2025, was $0.96 USD. This represents an astronomical intraday movement of plus 0.33 USD, or a staggering plus 51.57% gain for the session. Now, the common expectation for a microcap stock with a single-day move this dramatic is often pump-and-dump speculation. But a deeper look at the catalyst suggests a far more fundamental and unexpected shift in the company's narrative that you need to be aware of. This isn't just retail noise. It's a profound, if fragile, reevaluation based on real business development. The critical insight here, the one the general market narrative is likely overlooking, is the sheer significance of the contract announced late last week, a substantial deployment with a major defense sector security organization in the Middle East. For a company with a market capitalization in the single-digit millions, a contract described as one of BioKey's largest security sector deployments in the region to date is not merely good news. It's a foundational tremor that potentially alters the company's entire revenue trajectory and credibility, especially in the high-assurance government and defense vertical. This isn't just another partnership. It's a validation of their identity-bound biometric technology in one of the most security-sensitive environments globally, an unexpected proof point that flies directly in the face of the stock's previous performance. The general belief about BioKey stock, particularly as an investor scrolling through various investing sites or monitoring your intelligent portfolio on platforms like Schwab Intelligent Portfolios or Fidelity, has been one of extreme caution. For months, the stock is traded in the penny range, languishing near 52-week lows, with a long-term chart that can only be described as challenging. The market expected more dilution, continued net losses, and a struggle for relevance in the crowded identity and access management space. This contract, however, challenges that reality sharply. The immediate price movement, the violent swing upward, reflects institutional and sophisticated trader recognition that this news provides a level of quality revenue assurance that was simply not priced in. We're seeing massive volume spike. Trading volume has been through the roof, a clear sign of significant buying interest, far exceeding the average daily activity. This volume surge is a crucial technical indicator, demonstrating conviction behind the move rather than just a shallow spike that quickly fades. The fear of missing out, or FOMO, is real, but it's anchored to a tangible, high-value catalyst. This kind of single contract visibility in the defense sector, even if the client remains unnamed for security purposes, lends immense credibility that could act as a magnetic force for future high-margin government and enterprise deals both domestically and internationally. Think about how major defense contracts for companies like Lockheed Martin or similar firms instantly boost their perceived security and reliability. This is a micro-cap version of that same phenomenon. Looking closer at the recent stock movement, the sheer percentage gain demands a closer examination of the structure of the stock itself. As a microcap, BKYI possesses a very small float, meaning the available shares for public trading are limited. This small float is the mechanical reason why any significant buying pressure, particularly from a hedge fund or a larger institutional investor deciding to initiate a position, can lead to such explosive moves. While the latest institutional activity reported from the previous quarter showed a mixed picture, with some large holders like Armistice Capital significantly reducing their position, the volume spike on this latest news suggests a new wave of institutional accumulation is underway. When you see insiders, such as the CEO, making multiple purchases in recent months, as the reports confirm, it signals confidence that aligns perfectly with a major contract announcement. These insider purchases, though small in dollar value, are a tangible vote of confidence from those who know the business best, and that confidence is now being rewarded. The challenge now for anyone engaged in online investing or using a Fidelity brokerage account to monitor this is separating the signal from the noise. The signal is the high-assurance defense contract. The noise is the inevitable volatility that comes with a low-float, high-beta stock reacting to major news. It's critical to remember that while the price is soaring, the underlying company still operates under a cloud of historical financial difficulties, including a negative trailing 12 months EPS and concerns about maintaining NASDAQ compliance. This tension between immediate contract-driven excitement and long-term financial health is the core of the investment argument for BKYI. The business itself, BIO-key International, is centered on providing identity and access management solutions, with a strong focus on biometric authentication, or what they term identity-bound biometrics. In a world where passwords are a massive security liability, their core product, PortalGuard, a cloud-hosted or on-premise IAM solution, offers multi-factor authentication and biometric options designed to deliver high levels of security assurance without relying on traditional, often inconvenient methods like mobile devices or hardware tokens. They offer a comprehensive suite of solutions, including the WebKey biometric platform for large-scale ID infrastructure and their line of accessory fingerprint scanners, like the new EcoID 3 USB fingerprint scanner, which has received FBI certification. They are a systems software company providing a crucial service in the rapidly expanding cybersecurity market. Their revenue streams are primarily license fees and services. The thesis for the company has always been simple. As digital identity security becomes non-negotiable for governments and large enterprises, their specialized biometric solutions should gain traction. The reality, however, has been slow adoption and difficulty converting their technological edge into consistent, profitable revenue, leading to the low stock price and the aforementioned financial struggle. The gross margin, however, which sits robustly in the high 70s, indicates that when they do secure a deal, the profit potential on the service delivery is excellent. The issue has been scaling the revenue side. This Middle East defense deal is important precisely because it suggests a potential breakthrough in scaling. The recent flurry of positive news is not limited to the Middle East. They also recently announced a strategic partnership with IT2Trust to expand the distribution of their biometric solutions across the Nordic region. This points to a wider, concerted push into the EMEA markets. The Nordic region, with its stringent GDPR regulations and high focus on digital security, offers another important validation point for their GDPR-compliant solutions. From a corporate finance standpoint, they recently secured $3.1 million through a warrant exercise agreement with an institutional investor. For a small company struggling with liquidity and profitability, raising capital is a necessary but often dilutive evil. But securing this capital from an existing institutional investor through a warrant exercise while maintaining a relatively low debt-to-equity ratio suggests an active effort to shore up the balance sheet and fund this very international expansion. For investors practicing self-investing through their individual brokerage account on a Robinhood stock trading account, or perhaps using SoFi Invest, the key takeaway is that the company is actively and now successfully generating the sales momentum needed to justify its existence, though the risk remains incredibly high. Now, let's consider the future outlook, tying back to that expectation versus reality dynamic. The prevailing market expectation is still that BKYI is a lottery ticket, a stock that sees a spectacular spike but inevitably falls back to earth as the news cycle passes and the market remembers the operational losses. The reality, though, is that this recent contract may represent a critical inflection point, not just a temporary trading opportunity. Comment below with your thoughts on whether you believe this defense contract win is a one-off event or the start of a consistent flow of high-margin government business for BIO-key International. The immediate opportunity lies in the strong demand for high-assurance identity solutions, especially in critical infrastructure and government sectors where the threat landscape is constantly escalating. This Middle East contract could lead to follow-on business, not just with the original customer, but also with peer organizations who will undoubtedly take notice. The market for biometric security is only growing, and BIO-key's differentiated identity-bound approach, which they argue is superior to traditional MFA relying on phones or tokens, gives them a unique selling proposition. Potential catalysts for sustained upward momentum include securing another major named contract, providing clear guidance on the revenue size and duration of the current deal, or, most importantly, achieving quarterly revenue growth that clearly outpaces operating expenses, moving the company towards profitability. The risks, however, are just as real and cannot be dismissed, even with the stock move. The first major risk is execution. Can they successfully deploy and service a contract of this magnitude in a challenging region? Technical deployment failures or integration issues could severely damage their reputation and erase the gains. Second, the fundamental financial position remains weak. While the gross margin is high, the operating expenses are significant, and they need several more contracts of this size just to stabilize the income statement. Third, the high stock volatility and low liquidity mean that profit-taking after this enormous surge could easily push the stock back down towards previous levels, especially if no further news is forthcoming in the short term. The challenge for investors who use advanced platforms like Interactive